Hi, here's some basics on the accrual basis and cash basis when it comes to recognizing revenue and expenses. Students new to accounting have to learn the difference between cash inflow and outflow and when revenue and expenses are recognized. So it's a rather common error for students to believe that when cash comes in, revenue is earned. And in most cases, growing up and having a paycheck, that's the way we think about things. That's the way the U.S. actually taxes us, is based on when we receive the cash. But that's not actually what happens in the accrual basis. And most people, when given the right example, actually understand it, and the accrual basis seems to make more sense. So while the initial reaction is that cash in is when revenue is earned, the reality is there is not a connection between cash coming in and revenue being earned. There is not a connection between cash flowing out and expenses being incurred. There are times when cash comes in or out, and there's no connection at all to revenue, expenses, or a number of other items. For example, cash could go out to purchase an asset such as a car, such as supplies. There's no revenue earned or expenses incurred. Cash could come in placement of someone who owed you money, which is an accounts receivable. So cash goes up and accounts receivable goes down. There is no connection to revenue expenses. There's liabilities. So someone has a mortgage or they have a business loan and they pay that out. The balance of the loan goes down and cash goes down, but there is no revenue or expense. And while you might argue there's some interest in that payment, that is correct, but we deal with the expense part differently. It doesn't have to do with the total cash amount. And dividends. When a dividend is paid, a dividend's kind of an awkward thing. It's not a revenue and expense, and it's not an asset or a liability. It's a prior earning we're giving back to the owners. So it's something from a prior period, and it's certainly not a revenue or an expense. But I'm going to give you some examples that make it easy for you to understand when we earn revenue and incur expenses. But first, let's go over the basic definition. In the accrual basis, revenue is recorded when it's actually earned, and earned is the big deal. Expenses are recorded when consumed, and it doesn't have to be a physical item such as supplies that we're using in the business. It's just something that we're using. And the accrual basis is the method that's allowable under GAAP. In contrast, the cash basis says revenue is recorded when it's received, expenses are recorded when paid, and it's not allowable under GAAP. And you'll see why in a minute. So let's say I hire you to come over and paint my porch. Please come over this afternoon. I'm having a big party in a couple days. I really need the house painted, etc. I want you to come over and paint my porch. But I'm not going to be able to pay you till tomorrow because I have to go to the bank and get some money. So it's a beautiful day and you do come over and you do paint my porch today. When do you earn the money? Today or tomorrow? The accrual method says you earned it today because that's when you actually did the job. And that if I don't pay you, I still owe you the money because you've done the work. You have earned the funds. The cash basis says, well, you really didn't earn it yet because you didn't receive the money. Now, most of us would agree that you've earned the money. You painted the porch. Under the cash basis, you haven't earned it. Now, the idea under the accrual basis is that I will pay you tomorrow. You have a receivable from me. You have an accounts receivable from me, and I have an accounts payable to you. The cash basis doesn't have any IOUs, so there are no accounts receivable or accounts payable. So under the cash basis, not only did you not earn the money, but you can't even show that I owe it to you. So the accrual basis seems to make more sense. Now, suppose the opposite happens. We're talking and you say, wow, I can come paint, but I can't do it till tomorrow. I'll have to go out and buy the paint today. And I say, okay, I'll even give you money today so you have money to go ahead and purchase the paint. So you're going to paint tomorrow, but I give you the money today. When is the money earned? Did you earn the money today, or do you earn it tomorrow when you actually do the job? Similar to the opposite, where you were going to get paid tomorrow, the accrual is based on when the job is completed, when you're doing the work. So under the accrual method, you earn the money tomorrow because that's when you have the activity. In the meantime, from today to tomorrow, I gave you the cash. You owe me the paint job. You owe me the fact that you're going to paint. So you have a liability to me, and I have a receivable to you. Under the cash method, you've actually earned the money today, even though you haven't done anything. And you don't even have to go out and buy the paint. Just the fact that I've given you cash under the cash method says you have earned the money. So one of the big things here is to actually think about what you were doing in your job. Likewise, what about the expenses? If you buy the paint now and use it tomorrow, when is the expense incurred? Well, if your revenue is earned when you actually do the job, that's when you're actually going to use the paint. And if it's a custom color or something you can't return, then the cost might be sunk. But if you buy the paint now and it rains tomorrow and you can't paint my porch, you still have the paint, but you haven't earned the money. So the accrual method talks about matching. It used to be called the matching principle. Now it's called the expense recognition principle. But I love the term matching because it still certainly matches things together and helps us organize when we make a purchase and when we have an expense. So if I buy the paint now and I can't use it tomorrow, I have an asset called paint. It's a supply. It's something I'm going to use to generate my money or my revenue. So under the accrual basis, we have this matching of revenue and expenses. So the expense becomes an expense tomorrow because that is when the paint is being used to earn the revenue. Otherwise, it's just paint sitting in a can that's waiting. It's got the potential to earn money, to earn revenue, but it hasn't earned it yet. But under the cash basis, because I paid the cash now, I would have it today as an expense. So again, people really understand it when you put it in a certain example. The hardest things for students to understand is that there's not a connection between the cash and the revenue or expenses, and that there are an awful lot of other times when cash goes in or out that have no connection to a revenue or an expense. So I hope this information helps you understand cash basis and accrual basis a little bit better.